It is Wednesday, the 21st. Good morning. On the agenda, Trump Day in Davos, Japanese bonds rebound, and UK inflation data is imminent. Anna.
Markets do look, Tom, a little bit calmer than they did this time yesterday. That is the good news if you're looking for calmness. Maybe that's not what you're looking for. But Eurostoxx 50 futures are down by 0.2%. So we could see a little bit more weakness at the start of trade. US futures, though, point a little higher. Are we done with the dollar selling narrative or the US selling narrative? Well, the dollar at least is pretty flat, but President Trump speaks later. We'll see what he has to say. Are we done with selling Japanese debt? Yields are certainly falling. We're down by 14 basis points at the 30-year. The countdown to the opening trade starts right now.
We have a lot of meetings scheduled on Greenland. I'm leaving tonight, as you know, for Davos. And we have a lot of meetings scheduled on Greenland. And I think things are going to work out pretty well, actually.
It is going to be a big day in Davos. It is a huge day for the dollar. The President of the United States is en route. Yes, there was a few travel troubles, but he is coming and he is going to deliver a speech a little bit later on today. The dollar was down hard yesterday. It has bounced a little bit, but it is by no means filling the gap. It has effectively stayed down. We're trading, say, 117 euro dollar. What does this speech mean for financial markets? Are we going to see Trump upping the rhetoric? How much further is he prepared to go? And how will markets react? The dollar is in the crosshairs today.
Yeah, the dollar absolutely is. And what, like you say, what message will he come wanting to give? Will he be wanting to ratchet up tensions? Will he be wanting to ease tensions? Some of that soundbite you just played from President Trump said, you know, does that sound like, it kind of sounded like someone who wanted to find some common ground, but, you know, that's not been the story of the last few days, has it? So we'll see whether that is actually the case. But yesterday, the conversation very much, and no doubt will continue through 2026, around the sell America narrative, to what extent it extends or not.
And that debate was on the ground for us in Davos, of course. What does the speech do? Either to lean into the sell America trade or to defang it? Because you had Sergio Ermotti coming out telling Bloomberg that essentially the idea of selling US Treasuries, there is no alternative, essentially, paraphrasing what Sergio Ermotti had to say. It would be a dangerous bet. But we also saw one of the largest holders of Treasuries in Denmark, a Danish bank, saying they're going to start to exit that trade. So the debate remains live, and the speech today will either lean against that or into that.
I'm not even sure you have to sell. You just have to not buy. And I think that probably is what a lot of people are thinking about as well. Don't necessarily have to aggressively sell out of your position. America needs funding. And if that funding does not continue, then that's going to be a problem for yields. And you're going to see a problem with the dollar. Does the dollar trade continue to be the pain point for America? It's not in stocks. To a certain extent, it's in the debt market, but the dollar is where the signs of weakness are. If Trump comes today and sounds bellicose, how does Europe react? How do European leaders react? Carney's talking about a new world order. Is Europe prepared to push back this time? I think this speech is absolutely critical to where the buck goes next.
Yes, and you're right to point out that Treasuries didn't maybe move quite so much on this. They were moving on Japan yesterday, and Japan was a really big topic of conversation. And there again, things do look a little bit calmer, but, you know, we'll see. The finance minister calling for calm. We have seen yields on the move as a result of that. We've seen buying of Japanese long end. We've seen those yields coming down. And we've seen the second largest bank actually in Japan. This is Sumitomo Mitsui saying that they will double their holdings of JGBs. But just echoing what Mark Cudmore told us yesterday, they're waiting for some calmness. They're waiting for a floor to be put in this trade. Not sure we got it today. Maybe we have. But they're waiting for the floor to come in so that they can establish to what extent they want to repatriate, because it is all about that repatriation trade as well.
Japanese yields have come down a little bit, but they've only come down a little bit. It feels like a big move this morning, but actually if you take a look at the 2-day chart, the 3-day chart...
Yeah, up 30, down 15.
Yeah, precisely. So we are still significantly more elevated, and that's true of a lot of bond markets as well. And here... You had the UK blow up, now you're getting a Japanese blow up. People are asking whether the US is next. Are these just pre-shocks towards the big one, which is basically a crisis in the US bond market? It doesn't feel like we're there yet by any stretch of the imagination. But the fiscal story is absolutely front and centre, and the bond market is worried.
And the question in Japan is how you fund these tax cuts. And still there is no clear answer to that from the Japanese government. And until there is an answer on that, then the view is there's going to be still continued volatility in the Japanese bond markets. And to your point, there is still a question mark about how the US can fund this deficit with those tax cuts really coming into force in 2026.
Let's talk about the UK, because we've had data coming out there around the UK, and this coming a day after we got the wage data, Tom.
Really focused on services. Broadly, the data that's coming out in the last few minutes is broadly in line with the survey. On services, though, edging a little bit lower, 4.5%. That's on a year-on-year basis for the December number. The survey had been for 4.6%. At a month-on-month level, the broad CPI headline number coming in bang in line with the survey, 0.4%. Year-on-year, a little bit higher, 3.4% versus a survey of 3.3%. But again, services seemingly heading in the right direction. There's all the anomalies. Of course, this is the December print, so the holiday factors. There's an expectation from Bloomberg Economics ahead of this data that you're still on track to get to 2% in terms of headline inflation by April. We'll see if they adjust that view. Looking at the pound, not a huge move right now, 134 on sterling. There was a little bit of downside, but that's adjusted.
Because the market was looking for this. They were looking for this slight uptick. It has come in, the year-on-year number has come in a little higher than the market anticipated. But to your point, Tom, maybe it's the fact that services are a little lighter that means that the pound is just sort of fluctuating around the going nowhere territory. Perhaps just relieved to be moving, or at least having some domestic news items to deal with, because yesterday was very much about what was going on in the US and what was going on in Japan.
And what was going on in Japan, I'm just trying to go through the details. Passenger transport by air looks like it's coming through at 0.3. That was the November number. Actually, that was the November number. They haven't filled in the number for this time. There's lots of anomalies. Airfares is going to be one of them.
There was an expectation. Bloomberg Economics, they saw tobacco and airfares.
Yeah.
Were two components. So we'll see what the numbers are on that.
Basically, this is a blip, and it's expected to unwind fairly quickly. Burberry's numbers are out as well. Comp sales up by 3. The expectation was for a 2.29 number. But again, how do you treat a luxury stock right now? Burberry's gone sideways for a very long time here. How exposed is it to trade wars and all the other factors, or is this still can they get the fashion right story?
Absolutely. Josh Schulman is the relatively new CEO at that business. A lot of confidence in him from various brokers, UBS, Barclays, RBC, all pretty positive. Some of them suggesting that the market has been underpricing the turnaround. So we'll see whether that really does deliver. Let us tell you about some of the conversations, great conversations coming up on the programme today from here in London and in Davos. Let's start with Davos, of course. From the slopes in Switzerland, we'll be hearing from Jamieson Greer, the US trade representative. That is a very timely conversation, as is the conversation with Steve Witkoff, US special envoy from the Middle East to Russia. He seems to be everywhere in every geography, so plenty to talk about with him, no doubt. Bill Winters, Standard Chartered's CEO, will be with us to talk about how the markets, how investors, how the banking sector is coping with the volatility that we are seeing in some asset classes.
So some of the key names to stay tuned for throughout our programming. 9 a.m. UK time. Also worth noting, we're going to be getting the IEA oil markets report. So another gauge, another bit of colour in terms of demand around oil. Of course, we have seen those weaker prices. Iran is a factor still. US earnings, of course, Johnson and Johnson, Halliburton and Charles Schwab, they come as well. Those earnings, will break those across US programming. Warner Brothers shareholder deadline. That is, of course, interesting on the back of the Netflix results. And Netflix CEO saying they continue to focus on that takeover, of course, of Warner Brothers. And later, the Supreme Court, yes, they didn't rule on tariffs yesterday, but they will be hearing the case against or around Lisa Cook, of course, and whether or not the Trump administration has the legal chops to be able to force her out of her job. So that is an important one in terms of any decision that comes.
Yeah, she is arguing because of the nature of what is alleged against her, the scale of it or the lack of scale, as she would see it, and because of the timing of it, that this is not cause. So this is that's her argument. The reason this matters is it's all about reshaping the Fed and the extent to which Trump is able to do that.
Scott Bessent is once again speaking in Davos. Let's take a listen to what the Treasury Secretary has to say.
In terms of our bilateral relationships, if Switzerland more and more would side with EU, for example, or would depart from our traditional neutrality?
Well, let's talk about what Switzerland emulating the failed EU economic policies would do. Switzerland, a country a country of 9 million people. Amazingly, the box is so far above its weight class. It is an industrial powerhouse. It is home to, as I said yesterday, a thriving middle class. And I would worry if you started emulating the EU policies of administration, bureaucracy, and economic sclerosis. And it would be very disappointing if Switzerland decided to get on the EU bandwagon of talk first and not think about the consequences later.
Thank you. Let's move to the next question, please. Front row, yellow tie, name and outlet, please.
Edward Lawrence for Fox. Thanks, Mr. Secretary. So the president says he's going to put a 10% tariff on Greenland starting February 1st. It goes up to 25%. How concerned are you that this is going to start a trade war with Europe? And is it worth risking the U.S. economy for Greenland?
Well, I'm not going to get ahead of the president. The president obviously believes that national security is economic security. Economic security is national security. And we're not putting a 10% tariff on Greenland. We're putting a 10% tariff on the 8 countries that chose to send troops to Greenland. I mean, for those countries to activate their troops, I'm not sure what signal that's supposed to send. It seems pretty quixotic to me. President Trump has made it clear that we will not outsource our national security or our hemispheric security to any other countries. Our partner, the UK, is letting us down with the base on Diego Garcia, which we had shared together for many, many years, and they want to turn it over to Mauritius. So President Trump is serious here. Just as I said, after Liberation Day last year, I would tell everyone, take a deep breath. Do not have this reflexive anger that we've seen and the bitterness. Why don't they sit down, wait for President Trump to get here and listen to his argument? Because I think they're going to be persuaded.
Yeah, if I could, on the Supreme Court today, you went to a Supreme Court hearing. Why shouldn't Fed Chairman Jerome Powell go?
Yeah, I am a political appointee, and Chair Powell is not. Chair Powell says that the Fed must stay above politics and the politics cannot get enmeshed into the Fed. I have become very frustrated with the Fed for refusing to do an internal investigation. I think all of this could have been avoided. I have been calling for an internal investigation at the Fed since last summer, and even before that. So there are 2 things at stake here. One, does the president have the authority to remove Governor Cook for alleged malfeasance? 2, did Governor Cook commit mortgage fraud? I am not sure why Chair Powell would go and support Governor Cook when the Fed has not undertaken an examination of whether she did in fact commit mortgage fraud. If she did, she is stealing from the American people every day because she has a GSE-backed mortgage. And as I've said before, it is very unfortunate that on Chair Powell's watch, we will have seen between 4 and 6 governors and bank presidents have to step down for ethical lapses. Now, 4 to 6 may not seem like much. That is out of 19. I can tell you, as someone who was on Wall Street, if you were the leader of a Wall Street firm, you would have a failure to supervise problem. So again, I think that his sitting in the front row of the Supreme Court is a political statement, and I agree with him. The Fed should not be politicized. He is politicizing the Fed. I went in my capacity as a political appointee in the Trump administration.
Governor calls you smug. Are you smug?
Yeah, you know, I think it's very, very ironic that, you know, Governor Newsom, who strikes me as Patrick Bateman meets Sparkle Beach Ken, may be the only Californian who knows less about economics than Kamala Harris. He's here this week with his billionaire sugar daddy, Alex Soros, and Davos is a perfect place for a man who, when everyone else was on lockdown, when he was having people arrested for going to church, he was having $1,000 a night meals at the French Laundry, and I'm sure the California people won't forget that. And I can tell my message to Governor Newsom is the Trump administration is coming to California. We are going to crack down on waste, fraud, and abuse. And I was told he was asked to give a speech on his signature policies, but he's not speaking. Because what have his economic policies brought? Outward migration from California, a gigantic budget deficit, the largest homeless population in America, and the poor folks in the Palisades who had their homes burned down. He is here hobnobbing with the global elite while his California citizens are still homeless. Shame on him. He is too smug, too self-absorbed, and too economically illiterate to know anything.
Thank you very much.
Let me know if you need any further clarification.
And that goes for all of you, if you need any more clarification on that. Next question, please. Gentlemen, second row with glasses, name and outlet, please. Thank you.
Good morning, Jamie Keaton, Associated Press. Thank you, Secretary, for coming to see us again. Yesterday, the S&P 500 dropped more than 2%. Gold and silver hit new highs, and the European Union Commission President Ursula von der Leyen said that U.S. tariffs over Greenland were a mistake, and President Macron has mentioned the use of the EU's anti-coercion measures, all after you said, as you've said this morning as well, that people need to take a breath over this situation. What conversations have you had with EU and other counterparts to help stabilize markets and to help convince them to take a breath? And I'd just like to add, how concerned are you that institutional investors in Europe may be pulling out of treasuries, such as from pension funds in Denmark and elsewhere?
Well, the size, Denmark's investment in U.S. Treasury bonds, like Denmark itself, is irrelevant. That it's less than $100 million. They've been selling treasuries for years. I'm not concerned at all. Again, as Treasury Secretary, I see our Treasury auctions. We've had record foreign investment. And also, as I said yesterday, I think it is very difficult to disaggregate any of the noise around Greenland, around these inflammatory statements by President Macron, by President van der Leyen, from what we have seen in the Japanese bond markets. We saw a 6 standard deviation move in Japanese bonds, which has spilled over to other markets. And I've been in touch with my Japanese economic colleagues, and I'm assured that they will take measures to stabilize that market. And just so everyone knows, that this notion that Europeans would be selling U.S. assets came from a single analyst at Deutsche Bank. Of course, the fake news media, led by the Financial Times, amplified it, and the CEO of Deutsche Bank called to say that Deutsche Bank does not stand by that analyst report. I'm waiting for President Trump to arrive, and that will be done at his level.
Great, thank you. Let's take the next question, please. We'll move to this side of the room. Sir, right here. Name and outlet, please. Thank you.
Thank you very much. Stefan Lanz, biggest news media of Switzerland, 20 minutes. Have there been, can you give us an update on the trade negotiations and tariff negotiations with Switzerland? Have there been talks already? Will there be talks? Will you have meetings with homologues from the Swiss Federal Council?
Yeah, I'm seeing President Parmalat today, who I have a very good relationship with. We got to know each other in 2025. I find him to be very economically sophisticated, on trade, on economics. He's a fantastic advocate for the French people. And I think with his leadership that we will be able to land a trade deal that is fair for the American people and ensures the continued prosperity of Switzerland.
That's great. Thank you. We'll take the next question. Sir, right here, second row, name and outlet, please.
Yes, thank you. Holger Ahlich, Swiss business publication Handelszeitung. Mr. Secretary, I listened yesterday to your session at Davos where you said US needs to take Greenland not to be drawn into a major conflict, but by aiming at taking Greenland, aren't you creating that conflict with your allies in Europe? Thank you.
I think that we are asking our allies to understand that Greenland needs to be part of the United States. And just a little history lesson, the United States bought the U.S. Virgin Islands from Denmark during World War I. And I will remind everyone that Denmark remained neutral during World War I. They actually sold quite a bit to the Germans. But the Danish understood then the importance of the U.S. Virgin Islands. They were worried about the German ramifications if the war spread to the Caribbean, and the U.S. needed the U.S. Virgin Islands. They wanted a calm Caribbean after purchasing the Panama Canal from the French.
Great. Let's move to the next question, please. Let's go back to this side of the room. In the glasses, second row, name and outlet, please. Thank you. As a warning, everyone, we have about 5 minutes left. The schedule's a little tight today, so we'll have time for about 2 or 3 more questions at the most. Thank you.
Hi, good morning. Alina Trabatoni, Montel News. So tariffs and trade actions, in theory, strengthen the dollar, and since LNG is priced in dollars, could a stronger dollar make US LNG more expensive for European buyers in euro terms? And isn't there concern that European markets could look elsewhere for suppliers?
Well, your question doesn't make sense, because if you just said it was priced in dollars, then why would they look elsewhere for supplies? If oil comes from Saudi, it's priced in dollars. If oil comes from the North Sea, it's priced in dollars. So I don't think I understand the question.
Yeah, LNG, but I mean, they could get better deals elsewhere.
Well, I think you're tripping on your own question. That there's a global price for oil, and the only way to get a better deal elsewhere is to buy sanctioned oil from Venezuela, sanctioned oil from Iran, and sanctioned oil from Russia. I will point out that the EU, 4 years into the Ukraine-Russia conflict, continues to fund the Russian war machine by buying cheap Russian oil. In 2018, President Trump warned the Europeans, do not build Nord Stream 2. Do not buy Russian oil. And guess what gave Vladimir Putin the war chest to fund this war? The European purchases of Russian oil.
Thank you. We'll move to the next question, please. I'm going to give some love to the back. Gentleman back here, please. Orange lanyard, head with the beard. Yeah, yes, beard. Name and outlet, please. Microphone's coming from this side.
Thank you for the floor. Raphael Zwallen, Swiss News Agency. I have a question on trade, and my understanding you would like to export more agricultural products and cars to Europe under American standards. But in the European standards are different. So are you asking European partners to change the standards, or do you respect that in Europe we may have other standards?
Well, I think that we can look at global standards. For instance, our partners in Japan agreed that U.S. standards are to remove a lot of their onerous standards. Let's be clear. Europe is a regulatory morass that is built on bureaucracy and layering of rules that constrain economic activity and economic growth. As we've seen from the Draghi report, that Europe taxes itself, I believe it's 50% on goods, 100% on services intra-Europe. So I think that Europe should break down the intra-Europe trade barriers, and I think that they should break down the external trade barriers, because what we find is these artificial standards are called non-tariff trade barriers, and that they are a major problem throughout the world.
That's great, and this is going to be the last question then today, I think. We'll conclude it up here back in the front row, please, sir. With laptop, name and outlet.
Hi, Laurent Thomé with Agence France Presse. Couple of questions, if I may. Could you tell us if President Trump, what happened with Air Force One, and if you think, if President Trump will be here on time for his meetings and his speech? And this morning, President Macron's office said that France wants a NATO mission, a NATO exercise in Greenland. What would you have to say about that?
A couple of things. I believe President Trump is going to be about 3 hours late. I haven't seen the updated schedule. And that if this is what all President Macron has to do when the French budget is in shambles, I would suggest that he focuses on other things for the French people.
Would you take a question from the UK? Special relationship. Go on, one question.
Sure. We'll have one last question, very, very eloquently asked. If we could have the microphone. Microphone woman's left. Here, feel free to use mine.
Scott Bessent, the US Treasury Secretary, speaking there in Davos. I mean, a host of things to pick up on. Keeping up the critique of the EU, which the administration calls failed. He continued to do that, saying that Europe takes a lot of Russian oil still. The plan is to exit by 2027, I should point out, and it's been reduced by 2/3, the reliance on Russian energy.
Yes, certainly pointing a finger at Powell and the Lisa Cook case that is going to be there today, concerned that Powell is politicising the Fed by attending. Does that imply that the case is political? I don't know.
A lot of investors concerned that the US administration has been politicising the Fed, of course.
That's what the critique would be, is that the Trump administration and President Trump himself has politicised the Fed, and that's been part of the market conversation, hasn't it? The critique of Europe is withering, and you almost sense there's disdain in the voice of the US Treasury Secretary.
It's interesting relying on the fact that Europe had sent, those 8 countries had sent troops to Greenland. I know that was cited before as the reason for the tariffs, but you wonder how that conversation evolves in the days ahead. And Scott Bessent urging everybody to wait for Trump.
But if Scott Bessent is the precursor to the Trump kind of speech a little bit later on, isn't that the same kind of tone that we should be expecting from Trump? And therefore, if you're looking at the dollar today, it sounds like it's going to be fairly hard language. Anyway, we will continue the coverage. We'll be back. We'll talk bond markets in just a second. We'll continue our coverage of Davos. More still to come. This is Bloomberg.
Proposed additional tariffs are a mistake, especially between long-standing allies. The European Union and the United States have agreed to a trade deal last July. And in politics, as in business, a deal is a deal. And when friends shake hands, it must mean something.
Canada strongly opposes tariffs over Greenland and calls for focused talks to achieve our shared objectives of security and prosperity in the Arctic.
Europe has very strong tools now, and we have to use them when we are not respected and when the rules of the game are not respected, by the way. The anti-coercion mechanism is a powerful instrument, and we should not hesitate to deploy it in today's tough environment.
All of our focus is on de-escalation, not in worst-case scenarios. The strategic relationship between the US and the UK, the military and strategic partnership between our countries is more important than the partnership between any 2 countries in the world.
Some of the leaders speaking in Davos yesterday, talking to Bloomberg, talking to the delegates, trying to get across the message, maybe to President Trump. Europe does want a deal. It has a deal. It feels it should keep that deal. What happens next remains to be seen. What kind of message do we get from Donald Trump? This is what the futures picture looks like right now, OK? So European futures are bouncing a little bit, not by much. I just want to show you the 2-day chart of E-mini futures in the States, just to give you a little bit of context. So we dropped sharply yesterday, and we're still down. So we're down by 1.72%. When you see headlines today about stocks bouncing a little bit, it is a very small bounce.
Is Japan sidelined as a risk factor for these markets? There has been a rebound in terms of Japanese sovereign debt, as Guy was pointing out, over a 2-day period, though you're still not back to previous levels. But you are seeing yields down about 20 basis points on the 20-year, around 17 basis points lower on the 40-year in Japan, at just above 4%. In terms of what that is doing to the sovereign debt of Europe, you can see modest gains then, yields down close to 2 basis points on the German benchmark. The French OATs also gaining at 3.5, yields down 2 basis points there, and BTPs in similar territory. Of course, we'll be watching gilts as well at the open on the back of that inflation data. And Treasury's also getting a bit of a bid in the sessions day with the 10-year at 4.26, yields down almost 3 basis points.
Yeah, so yields down seems to be the theme of the morning. And as you say, Japan driving that narrative, down 14 basis points on the 30-year. Let's talk about the global bond markets. We're joined now by Lawrence Mutkin, head of EMEA rate strategy over at BMO. Lawrence, really nice to have you with us. Thanks for joining. I mean, Japan has been setting the agenda this week, hasn't it? So let's start with that. Was yesterday something very panicked, or did it reflect a move towards more reasonable valuations? I guess it could be both. But what was your thinking around the move yesterday?
Yeah, I think a lot of people were raising sort of comparisons with what happened in the UK in 2022 around their proposed, it wasn't quite a budget, mini budget, big fiscal expansion there. And obviously, ultimately, the UK bond market arrived at a place where the central bank had to step in to stabilise yields. This hasn't happened in Japan. I think it looks quite different in a way from the UK. The UK had this, as we know, this unique sort of defined benefit LDI structure that somehow meant that a big move up in yields turned everyone into a sort of self-reinforcing seller of bonds. And I don't think any of that's really gone on in Japan. So was it a very sudden move? Yes. Is it excessive volatility? Yes. Does it amount to market dysfunction in that same way? I don't think it does. No, not yet.
OK, so there is something reasonable about pricing in a higher yield.
One of the surprising things about Japan, if you look at it from a fiscal point of view, I don't think it's everyone knows that Japan's debt to GDP is twice all the debt to GDPs we're worried about in other countries, and yields have been much lower for most people's careers, 15, 20 years. And this rise in long-end yields kind of begins to put the long-dated forwards in Japan somewhere more on a par with where they are in places in most of Europe, still below the US, still below the UK. It may well be on a relative value view that certainly makes more sense, easy to say in retrospect, than the previous valuations.
Right.
Lawrence, bond market volatility has been coming down quite sharply over the last year. Look at the move index, you can see it happening. Do you think that period is now over?
I don't know if it's surprising that it's been that slow for this long. I think what we've had is this gradual reduction of excess liquidity during QT. It's been a global phenomenon, has been slow to affect the bond markets. And I guess the reason for that is because as long as excess liquidity is excess, there's still too much liquidity. So in a way, the bond markets continue to be supported by large amounts of cash sloshing around looking for a home. But everywhere, deficits are still positive, right? Government debt is still rising, and excess liquidity is falling. Certainly in the UK, that's Bank of England policy. But even elsewhere, the tendency away from QE towards ample reserves and no more than that should mean that in time, the balance between the amount of liquidity that's there and the amount of government debt that's still being issued and still has to be refinanced should come more into line, and that should change the dynamics within the market, make it less, as you say, stable, if you like, more inclined to moves.
OK, so volatility starts to maybe move higher. You talk about the fact that deficits are, we're still running them in a lot of places. Are yields just generally going higher? Can I just assume that the cost of debt is going up from here?
Well, yeah, we think so for two reasons. The first reason is the deficits thing we've just talked about. The second reason is bond markets are quite near the end of the easing cycle. Right. And we shouldn't forget that. Although people seem to disagree a lot about where bond yields are going to end up in the next 6 months or over the next year, it's pretty universally accepted that the end of the easing cycle will happen in 2026 in most places. Right? At the end of the easing cycle, typically what you get is a steepening of the yield curve. If yields aren't coming down anymore, people need a positive yield curve to make them extend duration. So, I think it's fair to say that you should expect a gradual rise in yield. We have a gradual rise in yield.
Gradual.
That's what, of course.
Gradual sounds nice.
We like that.
Yes.
You've taken the calm mantra. Be calm. Stay calm. What does that do? What does that view do to corporate credit? Do those spreads start to? They've been very tight. Do they start? Is this the year when corporate credit comes under pressure and those spreads start to blow out?
I guess what you're saying is do we manage a soft landing or is it going to be a hard landing in a way? And excuse me, I suppose the objective of all these central bank moves and the pacing of all these central bank moves is to maintain the economy on a sort of reasonable glide path. And if that's the case, I mean, if the economy's fine, I'm not a corporate credit expert, but it seems to me that it should be sustainable at these levels.
Guy wants to get a question on the UK. Before we get there, briefly, on the US, if we get to a scenario, and this is a theoretical right now, where we get 10% and then 25% additional tariffs by June, what does that do to US Treasuries? And what is the US Treasury reaction? What is the market reaction of US Treasuries to a heightened trade conflict between EU and the US?
I think that the problem that markets have with these things, right, is they're all incredibly contingent, and also they're all moving targets. So I think it's generally the case when you look at people's estimates of what was supposed to happen to the US economy this year and the global economy this year because of the tariffs that we were talking about last spring, the effects seem to have been a lot less than some people thought. But that's partly because it seems to me that the landscape of trade tariffs changes very quickly indeed. So if you look ahead and say, what would happen if you take a snapshot and say it'll be 10% or 25%, I think increasingly investors go, that's one day. We don't even know what that means for 3 months forward or 3 months afterwards. So they price, I think people price a degree of uncertainty rather than a specific outcome. And that leads to a permanent uncertainty premium.
Final quick question, specialist subject, just to get onto yours, kind of. Is the bond market, is the gilt market mispricing the Bank of England? And if so, where?
I think so, but
yes, by how much?
25 basis points, not a vast amount.
Okay, not a vast amount. Okay.
No, I mean,
could it be more than that?
It's my belief that the Bank of England will find, unless it can find a window to ease sometime around Easter, the window will go away, and we're already at the floor of interest rates. But
because of the rest of the world, or because of what happens in the UK economy?
Because inflation will start to go up again.
Right, okay.
Right? It seems to me that I have a different view on where neutral rates are in the UK to some of the more dovish members of the MPC. It's not my decision. The key, obviously, the key is to clarify.
One day maybe.
The key is there are 2 votes on the MPC. Yep. There's the governor and there's Dave Ramsden. Yep. Dave Ramsden's worried about the labour market. If that improves, he may be less dovish. Yep. The governor says he wants to see evidence that inflation will stay near target for a fair while. Okay. That's quite a few months, I think.
Yeah. Okay.
It'll be a while.
Lawrence Markin, thank you very much.
Thank you.
Indeed. Head of EMEA Rates Strategy at BMO. Let's bring in Markets Live Executive Editor Mark Cudmore right now for more market analysis. Mark, a bit more calm in the markets. Do we take a break, take a breather? Is the worst behind us?
I don't think the worst behind us, and I think our breather, our pause will not last long. The slight rebound we've seen in assets is pretty minor compared to the moves we've seen this week. We saw US equities wipe out their gains for the year. They're up about 0.4% at the moment. Sure, we've seen JGB yields bounce, fall maybe 15 basis points. They're still up more than 25 basis points from where they were Friday, which is an extraordinary move for only a couple of sessions. Gold is going on a tear. So overall this week we're seeing big moves so far. We're waiting to see what happens in Davos. I am extremely worried. Now, it's in the context that it always pays to be very optimistic. Humans have evolved for self-preservation. We're resourceful, we're innovative. We generally find, positive solutions. Doom-mongers rarely survive long in markets. However, every so often we make mistakes. Now, the reason I'm worried at the moment is not because I ultimately think there's some dramatic doom-monger outcome. I think we will reach a perfectly happy diplomatic fudge ultimately. My worry is the moment, and I'm not the geopolitical expert, I'm more a markets expert, is I do not see any incentive for either side to compromise in the short term, which means I think it gets worse before it gets better. For politicians to compromise, they either need to believe in the compromise. I don't think the Europeans don't believe in giving away Greenland, and Trump seems to believe he deserves Greenland, or there needs to be political expediency to do so. And neither side has political expediency to compromise right now because the bullying has been so public. So I fear this is going to get a lot worse before it gets better.
Okay, yes, the market negativity, I suppose, if that's any kind of feedback loop, was a lot more serious in April before positions changed. Is that something you look to, Mark, to get a sense of how this develops?
I think that's absolutely right. We had that comment out from Bob Michel overnight that that there's a message from markets to Trump. There's barely been a message so far. We've had a slight pullback, but U.S. stock markets globally are near record highs. So from a proper message that the U.S. administration is going to hear, we need to see pullback in stock markets of 10, 15, 20%. So I think that ultimately, as I said, we'll probably reach a good solution. I don't think you should believe some of the worst scenarios that are being considered out there. They can't be ruled out entirely, but it's not the base case. But it's just the path there, and I struggle to see why, when everyone is being so complacent about it, how we immediately go to a happy, wonderful outcome, right now. That's in the context now that we have a very set timeline. We know that the major protagonists in this debate are going to be speaking on the agenda today. So we're expecting more confrontation to come very, very soon, and that must be the base case. So I'm expecting a dramatic more selling off, and it might ultimately be that sell-off that we see in stocks and in bond markets, and possibly the dollar, unfortunately fiat currencies generally, that might be the prompt for ultimately for us to reach a better solution. We need to see the markets paying first.
Yep. Mark, the clock stopped, but I'm going to carry on. It was really interesting just talking to Lawrence Markin. His view is yields go higher from here. Is Greenland the real threat for the market? Is the turbulence that we're seeing around Trump the real threat? Or is it the fact that actually we're running big deficits, the market's beginning to increasingly pay attention to that, yields are going to continue to move higher, we're out of the recent range on 10s, we're into a new one, maybe another one comes after that, yields go higher and higher, bond market volatility starts to increase. Isn't that where the threat to the current paradigm ultimately sits?
I don't think so. It's a very valid question and one I'm considering. So there's two aspects to the answer here. There's two different time spans. I think over a much longer period, the yields that we've seen in the last 15 years were anomalous and won't be the future. And so I think that structurally yields are going higher. I don't know whether we necessarily see them much higher in 2025. One of the mistakes I've made in the last few years, as you know, since 2021, I've been calling for much higher yields, is that, I always kept thinking it's going to happen quicker than it's happened. And I realized this could play out over many years in the same way that the bull market in bond, lasted for 35, 40 years. So the bear market can play out very slowly. Look, I think there's lots of things going to affect bond markets this year. I don't have a particular conviction on where that yields go. What he's talking about is term premia is going to return to markets, which I completely believe in. But I think that's going to be a slow-moving situation. It's going to be harder for stock prices. It's going to make people question stock price valuations more. But we're going to adjust to it slowly, and it's the slower kind of time-moving thing. The Greenland situation is potentially extremely problematic because, as I said, I think if you look at it from a market lens, it's likely that we only get a compromise after seeing economic markets paying first. And I'm not the geopolitical expert, and I don't want to go too far and speculate in that domain, but we are certainly in unprecedented terms in terms of challenging the business and trade relationship that has dominated for the last 70 or 80 years. And I think that that's happened in a way that people aren't really registering how potentially critical this is. So I think that is the much bigger drama right now. It is true that yesterday JGBs volatility was bonkers and was dominating, but that was just for the session. This week it is Greenland.
And it seems like one of the cleanest plays around that uncertainty, and that's been there, of course, for more than 12 months now, is gold. And we're seeing that again in the session, to your point, more than 4,800. It looks like we're closing in on 5,000. What assumptions are being made about the dollar in terms of pricing around gold, Mark? What derails gold at this point?
I don't know what derails it. Actually, I do have an answer, Tom. There's nothing fundamentally, I think, that derails it. I think at some point, when we get extreme markets risk aversion, gold will sell off aggressively. In environments in the past, and we have two really good examples, the GFC and the pandemic, both were responded to by governments pumping money into the system. Easy monetary policy, just the best environments possible for gold. And ultimately, gold surged as a result of those policies, but not before collapsing first in the immediate risk aversion and deleveraging phase. And I think at some point we'll get markets risk aversion so extreme that precious metals collapse in the short term before then rebounding aggressively.
Well, we're in for some fun times ahead. Mark, great stuff. Thank you very much indeed. The big event, though, comes today, and the speech by Donald Trump, as Mark Cudmore, our Market Live executive editor, alludes to. And the question that the markets are really asking is, does this tension lead to a reallocation of assets? This is what some people have been saying on that subject.
One could probably think about having an overweight or underweight, but diversifying away from the US and also from the dollar is a quite dangerous bet.
Okay. More from Sergio Ermotti, his take on what is happening here. What does the geopolitics mean for those that are investing? We are going to carry on that conversation and talk about it. We've got some great conversations coming up from the World Economic Forum in Davos. Looks like Donald Trump is going to be 3 hours late. We've had a few plane troubles overnight. Air Force One returning to Joint Base Andrews, but he is on his way, and that speech will be coming a little later. This is Bloomberg.
Diversifying away from America is impossible. I think that in any major asset allocation, one could probably think about having an overweight or underweight, but diversifying away from the US and also from the dollar is a quite dangerous bet. You know, things can change rapidly, and the US is the strongest economy in the world. The one who has the highest level of innovation. Right now is a little bit bumpy, but I would say that I wouldn't really bet against the US.
There seems to be a difference between how the politicians and the policymakers talk about America right now and the backdrop for international relations, and how a business person thinks of America, the economy and the opportunity. I've mentioned this stat a number of times already today about the survey that PwC put out. They surveyed 4,500 CEOs and the top destination for capital for investment, America, and it was up on last year. As a bank boss right now, a CEO who's thinking about expanding around the world, why is US still top of mind for you?
Well, because from our standpoint of view, we see two big levers. First of all, wealth creation, GDP growth, innovations, and also more idiosyncratic to UBS is that we see potential for us to become more present, increase our market share. So that's one place. On the other hand, we are also very big in Asia. I mean, we manage 1 trillion of assets there. We are growing very fast. The economy is growing. Half of the population in the world is living there and is creating new wealth.
Don't divest from America. We're building a business there. Sergio Ermotti talking about what he sees next for UBS. A lot of people are saying you can't divest from America. But a lot of people are also saying, doesn't mean you have to buy, though. Those two things can be two different things.
It was really interesting that the Deutsche Bank note that, I mean, I don't know if it started this conversation, but it got some of it going at the beginning of this week, talking about the extent to which Europe owns American assets, and therefore, does it have a lever to pull there? Could it decide to sell? I mean, the who decides is important there. But Scott Bessent clearly struck a chord, because Scott Bessent, talking about that very note and saying that the CEO of Deutsche Bank has called to say that they don't stand by that, the view expressed in that research, which is an interesting statement in itself and one that's probably worth unpacking with Deutsche Bank.
I'm also reminded of the question marks around China and whether or not at the heat of their battle with the US, trade battle, that they would consider selling their holdings of US Treasuries. And ultimately, of course, China didn't go that path. For all the obvious reasons. Where do they park their savings? There are no more deeper and more liquid markets than US Treasuries. And that is the conundrum. The cost to China would have been enormous. The cost to Europe would be huge as well.
I'm sure it would, if you sell. But maybe you drop your allocation by 5%. Maybe you drop your allocation by 2%. I don't know what the impact would be.
And maybe the threat of doing something is more useful than doing it in some cases. 7:54 here in London. 6 minutes until we get equity trading here. Of course, some hours until we hear from President Trump in Davos. We are expecting that in the afternoon, of course, European time. This is Bloomberg.
What will Donald Trump say in Davos today, and how will markets respond? we are laser focused on that speech a little bit later on from the US president. We dropped sharply yesterday. This is S&P mini futures. Sharply into Tuesday, a little bit of catch up. We dropped quite sharply throughout the rest of the session, but we haven't bounced. On a 2-day basis, we're still down by 1.8% on S&P futures. We are waiting to see what Donald Trump does a little bit later on. Does he escalate or de-escalate? And that is what the session hinges on, it looks like right now. Everything else pales into insignificance. Tom, it looks like European futures are signalling the same thing.
They're flat as we build up to that speech, Guy. Maybe the exporters from Europe to the US should be in focus if he doubles down on those tariff threats. The commodities are a little bit mixed, interestingly. A lot of pressure on oil right now in the session, so we'll watch energy, basic resources. That's a mixed picture as well, with gold up strongly in the session as well. FTSE 100 then with that focus on basic resources at the open, currently a little higher by 0.1%. DAX futures down by 18 points. Anna.
Let's take a look at some UK stocks. They all just happen to be UK stocks this morning. In focus at the start of the trading day. Burberry, the luxury goods company, they are under a fairly new CEO. Greater China market seeing strong sales up by 6% thanks to demand from Gen Z customers. That seems to be the narrative there. So we'll see whether that spreads, any positivity there spreads across the sector or not. Defence will be in focus for wider reasons, but Babcock in particular in focus as the UK is seeking to advance talks to sell warships to Denmark, and they are manufactured by Babcock International Group. So we will certainly keep an eye on that one in the current climate. Curry is also in focus. The UK retailer could be up quite substantially. The electronics retailer forecasting higher than expected full-year profits, Guy.
OK, here we go. The session is almost upon us. Feels like a day of kind of a bit of early morning skiing, maybe. Wait for the president to arrive a little bit later on. That's when the action's going to be. We are, though, not going to do that. We're going to focus on what is happening out of Davos. There's some great commentary coming out. European markets, honestly, I don't think you're going to see much action. There could be some single stock stories that you're going to be thinking about, maybe a little bit of sector rotation. But basically, we are top down. This is a macro day. It's a geopolitical day. Geopolitics is ultimately going to determine it. How we price that, though, is going to be really key. The dollar hasn't bounced. Stocks haven't bounced. We are waiting for Trump. What is he going to say? Scott Bessent sounded really, really hawkish a little bit earlier on. Are we going to see a similar tone coming from the President of the United States? There you go. Look at that. European equity markets are doing nothing right now. We are sitting on our hands. We are waiting to see what comes out of Davos a little bit later on today. Tom, any sector rotation? What are we seeing there?
Basic resources is doing something. Copper prices are up 1%. That's lifting basic resources. That's your top sector so far. Gold, of course, up 2% as well, outstripping the gains coming through for silver, which is up 0.2%. Basic resources then gaining 1.3%. That is your top sector right now. Consumer goods up 0.7%. That's second on the list. On the downside, the pressure coming through for financial services down 0.6%. What is standing out to you, Anna?
Yeah, it's the read across from Burberry, because I don't think we have an opening price for Burberry itself yet, but we have the impact of it, and it is a positive impact. I certainly see that caring is higher. So we do see a focus on luxury goods. The sector, consumer products up by 0.7%, caring up by 1.5%, LVMH up by 1.4%. Now, let's remember, of course, the beginning of this week, we were particularly concerned about luxury goods and exports, in particular from Europe into the United States. But the numbers out of Burberry are interesting because they highlight strength in China, so maybe that adds a slightly different narrative, and enough at least for some of these luxury names to bounce a little this morning.
Yeah, they got battered around yesterday, didn't they? LVMH is the top points gainer on the Stock 600 this morning. Richemont is also climbing as well. It is up quite nicely. ASML is up by 0.3%, but the other standout story is what is happening, as you say, Tom, in terms of the commodity position. That's kind of where we find ourselves. But these are small rotations, relatively small rotations in terms of what we are seeing in these markets.
The higher yield story we were talking about with Lawrence Mutkin, whether we are in for a higher yield environment, it certainly seems to have captured the imagination for European stocks this week. Yesterday we saw real estate was the worst performing sector, and that was because of the higher yields that were driven by Japan. Today looks a little bit different, but we have another day of negativity for some of the real estate companies. Not falling by much, but that is the worst performing sector.
Gilt yields are down this morning. We're trading at 4.436.
Is that a UK CPI story? Is that a Japan story?
It's entirely in line with the rest of the European bond market. We're down by 2.1 basis points in the UK. We're down 2.5 in France. We're down 2.1 in Italy, 1.6 in Germany. The US 10-year is down by 2.4 basis points. So pretty much exactly in line.
The inflation data that dropped at 7 a.m. was not concerning.
Doesn't seem to be. I think people are treating it as a one-off. OK, the big story continues to be what is happening with the geopolitics. The derivative of that is obviously what is happening with the trade story. That is the focus of the World Economic Forum. We're waiting for President Trump's highly anticipated speech a little bit later on. What is he going to focus on? Where will be the emphasis? What will be the message also coming from European leaders? Let's come at this from a trade point of view, though, now. I want to take you back to the World Economic Forum. My good friend and colleague, Anne-Marie Hordern, is there. Let's get another line on this narrative. Anne-Marie.
Very good morning to you, Guy. It's so great to be back in your time zone. I'm joined now alongside U.S. Trade Ambassador Jamieson Greer, who's traveling here with the President of the United States. Ambassador Greer, thank you so much for your time this morning.
I'm happy to be here. Thank you.
I want to start with Greenland, because it's kind of been the elephant in the room. For Europeans, some have called it an existential threat. Others I've talked to have said this is really just a distraction. From when you arrived to now, have you seen that issue become a little bit less important? Have we de-escalated at all?
Well, listen, everyone brings it up, and they bring it up because the president has been very clear that he views it as an important national security issue for the United States. It's on our northern reaches of the North American continent. It's incredibly important to him and to the United States, and has been for a very long time, by the way. It's not.
Yeah, we have a
new
military
issue.
base there.
We have a military base there. We defended it in World War II when the Danes couldn't. So there's a long history with Greenland. So obviously it's come up. Mostly it comes up with me because there's the tariff angle. We have a trade deal with the Europeans. We're still trying to get them to lower their tariffs like they promised they would do. They haven't done that yet. So they bring up this potential tariff action on the Greenland side. For me, I try to keep those separate. For them, they put them together. I understand they have different national interests than we do.
You had said, though, this week that it's possible the president using it as a negotiating tactic. Could this now change the trade agreement you had set in motion with the European Union?
Well, the trade agreement really is purely about trade. It's not about national security. Greenland is a national security issue. I just came from a meeting with European Trade Commissioner Šefčovič, who I have a great relationship with. He raised this issue. He gave me the European view. I relayed President Trump's view, of course. It's not a term of the trade agreement, and this is what I keep trying to say: is we should compartmentalize these things.
But for the Europeans, it'll be an additional tariff.
Potentially, that's right. Yep.
So for them, it is part of the trade agreement.
Yeah, and I understand how they feel about that. I mean, one thing to keep in mind is that the trade agreement with the Europeans did not purport to solve every problem. And it didn't solve every problem. It solved a lot of problems, and it put us on a good path. But there are a lot of things it just didn't cover. Even trade things, right? There are things about pharmaceutical pricing or digital that aren't quite covered there. And it certainly doesn't include, geographical or territorial issues.
Do you see this administration using tariffs to gain new territory?
I mean, the president has been really clear, and the United States has always been aware of territory that's important for it geopolitically. You've seen the president talk about the Panama Canal. Obviously, we're talking about Greenland. Interestingly enough, one of the last times the United States acquired territory was getting the U.S. Virgin Islands from Denmark in last century. So there's a long history of countries acquiring territory through purchase or other means.
You're working with the Europeans now on critical minerals, choke points that come from China. How challenging is it to work with them on critical minerals when the president is threatening tariffs on a national security issue like Greenland, which you could actually get critical minerals?
Sure. I would say the critical minerals in Greenland, I'm not familiar with all of the deposits, et cetera. Conditions there to extract them are challenging, but they do have critical minerals, is our understanding. Critical minerals are also in the continental United States. The United States is taking a lot of unilateral actions on critical minerals to support new facilities and new mines in the United States. We're working with allies and others. We're trying to have negotiations on critical minerals to expand that, take what we're doing in the United States and grow it.
Has Greenland made it harder?
I mean, it doesn't make it harder for me, right? I think obviously it complicates it for the Europeans because they're trying to, loop Greenland into the trade issues. They want to combine the national security and the economic trade issues. I'm less inclined to do that. My own sense is, let's see what happens over the next few days. The Greenland issue, it's really at the leaders' levels. It's not, certainly not USTR. The Secretary of State's working on this issue, the Vice President, the President. I think we need to give a few days to let this process work through and see if we can find a good way forward.
Prime Minister Mark Carney had a very blunt statement yesterday to Davos. He's talking about basically if you're a middle country and you're not at the table, you're on the menu. He talked about a new strategic order with China. He just got back from a trip to Beijing. Are you concerned that some of this aggressive tariff policy has unintended consequences of pushing your allies towards your biggest adversary, which is China?
So I think that is really overblown. First of all, everyone trades with China. The United States trades with China. Europe trades with China. Canada trades with China. The Canada-China deal, it's not a comprehensive deal. It's really a trade. The Canadians put a big tariff on Chinese vehicles a couple years ago. The Chinese retaliated like they always do, and they did it on Canadian canola, which is an important export. And so the Canadians said, well, instead of having a tariff, we'll have a quota. We'll have a hard quota on Chinese vehicles. So from a substantive point of view, I think that has been a little bit overblown. I am focused on suggestion about Chinese investment into Canada and that kind of thing. I'm not sure that's healthy for the North American relationship. So we'll be looking at that. I just think that Canada, the Prime Minister himself said it, they're a middle power. History doesn't swing on the hinge of Canada's geopolitical decisions. 75% of their GDP depends on the United States. So I'm not terribly concerned about it. They're always going to have a constructive relationship with us.
When it comes to China, I'm sure you've seen the record exports that are still coming out of China, but the United States, those exports are actually down.
Yes.
So these goods are going elsewhere. Does USTR have tracking of the transshipped goods that are going to other countries and then entering into the United States?
So we've done some analyses on this, and there are a couple different ways this happens. There's kind of the actual illegal transshipment where you have a Chinese good that might go to Vietnam or Indonesia, and they just say it's an Indonesian article and there's been no change. That's an issue that Customs and Border Protection, they track this. People who import have to verify this, and so there are investigations about that kind of thing. Separately, there's the idea that you have Chinese goods, components and parts going to other countries and being assembled elsewhere and then coming into the U.S. Legitimately as products of those third countries. That's something we watch quite a bit. The reality is, as you mentioned, our trade deficit with China has really improved over the past 10 months, which is a great development. We do have some insight into parts and components going to third countries. We understand that development. That's the kind of issue in the future that can be dealt with rules of origin, et cetera. We're really focused on finalizing our trade agreements with others, keeping stability with China. We're in a good spot. We can't solve every problem right now, but transshipment is one that we're very focused on.
The Anthropic CEO had said to Bloomberg this week that selling high advanced chips to China is like selling nuclear weapons to North Korea. Do you think the United States should be selling advanced chips to Beijing?
Well, I saw those comments. I think they're kind of the most extreme thing you could say about it. The United States export control policy has always been fluid. That's how it is supposed to work. As technologies advance, older technologies become less sensitive and they can be shipped overseas. And so in the Trump administration, there's been an ongoing dialogue within the administration, with members of Congress, with industry, with consumers of chips, with producers of chips, to figure out what's the right balance for national security and commercial interests. And the president himself has made some of these decisions.
What do you make of Congressman Brian Mast's bill, which is basically saying that we need to regulate, Congress should be regulating these chips?
Well, Congress passed a law, the Export Control Reform Act back in 2018, that updated and gave new legal authorities for export controls. The Commerce Department has authority to implement those regulations. My view is if Congress has a view on this and they want to, take a stronger approach and take a more hands-on approach, they can do that. They can pass a law. Congress is notorious for proposing laws and never getting them passed. To me, I think it's important that we have a conversation with Congress, regardless of whether they pass a law or not, on their views. I think all of that goes into these conversations. And remember, when you see something that says, we're shipping these chips to China, every time that happens, whatever company wants to make that shipment, they have to make an application to the Department of Commerce. And on a case-by-case basis, the Commerce Department looks at it. They check who the end users are. They check what the security measures are. They check, who's going to be touching it along the way, and they make a decision based on that. That's a process that's been around for a long time. We execute that process in the Trump administration. We feel comfortable that we're, honoring our national security obligations.
Ambassador Greer, I just wanted to give you a moment to reflect on where you are right now.
Yeah.
I was thinking back about your Senate confirmation hearing, and I remember you talking about how you grew up in a mobile home, how your parents worked multiple jobs, and now you are here on what your colleagues have said to me is the epicenter of the global elite, but you are having these high-level conversations. What is it like? How does it feel?
Yeah, it's interesting. I grew up in a small town in Northern California, and we had mountains like this with, snow on top of them, but we didn't have chalets. We had, mobile homes and things like that. Listen, to me, it's very important that normal people, regular people, have a voice in what's happening, and that's a great thing about the Trump administration. They have a very strong working class base, and so that's a voice we're bringing. It's a voice I bring, right? I've been very fortunate to be in the U.S. and be able to, climb the ladder of success thanks to my parents and people who surrounded me. And I think that opportunity that we have in America, everyone else should have this too. When I go around to other countries, they have an elite, right? A lot of those elites are here, and they don't have that kind of opportunity. Even in Western countries, there's not the opportunity for advancement. So I think the American model, where we have growth, we have it available for every walk of life, I think that's one of our most important exports.
Ambassador Greer, thank you so much for your time this morning. And I'll send things back to you in the studio. That was the United States Trade Representative, Ambassador Greer, ending there on a personal note as he travels with the president here in Davos, Switzerland.
Yes, absolutely. Really fascinating conversation. Bloomberg's Anne-Marie Hordern on the slopes of Davos there. Interesting. Jamieson Greer might find some common ground with Keir Starmer then. He talks about no opportunity for advancement in the West, but he makes a lot about the fact he was the son of a toolmaker, so maybe there are some parallels in that conversation. Interesting that he called Mark Carney's reaction overblown, maybe that driven by anger that the president had put out a fake photo showing the US flag all over Canada, Greenland, Venezuela and the rest, and accused Europe of linking trade with Greenland, when I think the president did some of that at the weekend, at least.
Absolutely. All of this build up to the Trump speech. Are we hearing from Bessent, from Greer, what the lines are going to be? Are they going to differ? How aligned is the administration in all of this? What clues can we take thus far from what we've heard this morning out of Davos?
It wasn't that long ago, a few days ago, where we thought the speech was going to be about real estate, property.
Affordability, apparently, it's still supposed to be about.
Was going to be the pitch. Bloomberg Economics have looked back at his previous two speeches when he was on the ground in Davos and said that actually he's moderated and he pitches himself as a global leader. So their expectation, based on previous history, is that this will be a more moderate response from the US president in this speech. We'll see if that's the way it goes. A lot has changed.
Absolutely. Where could the surprises come from today? Could it be that Trump shows up and goes, I want a deal. I don't want to do tariffs. I want to find there's common ground here. We can do this. We can do that. Is the surprise that he de-escalates rather than escalates? Because everybody's expecting escalation here.
Yeah, absolutely. We are told by Scott Bessent earlier on, wait for President Trump, see the message he brings, and we will be all ears. Among the TV guests that we have still to come here on Bloomberg, Nicola Mendelsohn, Meta Head of Global Business Group, Bill Winters, Standard Chartered CEO, and Steve Witkoff, US Special Envoy. All of those conversations still to come. Guy.
Absolutely. Let's take a quick look at what the core numbers look like and what we are seeing here in Europe. This is the core six, some of the stocks that we watch on a daily basis to get a sense of what is happening. Defence stocks a little off this morning, but not by much. Tech's a little off, but not by much. In fact, everything's a little off, but not by much. Where you are seeing some weakness today is actually in pharmaceutical stocks. That is pretty much across the board. You are seeing names like Novo Nordisk coming under pressure today. It is down, but names like Astra, GSK, Roche, Novartis are also under a little bit of pressure as well.
LVMH, there you go, 2.5%. So the luxury story is interesting, and evidence may be of a turnaround in the Chinese market coming through in terms of the numbers from Burberry. Burberry then making strong gains, up more than 4%, and that's lifting the broader luxury space this morning after the beat in terms of third quarter sales. We're going to bring you the details next. This is Bloomberg.
Welcome back to the opening trade, 19 minutes into our session. And I think the session, as it is so far, not really reflecting the level of excitement and drama that the day could offer. We'll be heading back to Davos a little bit later, of course. We are awaiting the US president's address later today. We're keeping an eye on the timing. So far, it hasn't moved. 1:30 p.m. is the timing that we are being given for this speech. But we are, of course, alert to whether that shifts around.
Okay, before we get to that major moment, there's a bit of excitement when it comes to luxury stocks and what's been happening with Burberry. Burberry on the move then after strong sales in Greater China over the holiday period. Third quarter sales rising 6%, so doubling growth than the previous quarter in a win for CEO Joshua Schulman's strategy. to turn the brand around. The stock gaining 4.4%, as you can see. Let's bring in Maddie Parker, our consumer reporter, for the details. Maddie, what is going right for Burberry at this point? Can it be maintained?
Yeah, I mean, it's really good news across the board for Burberry this morning, and yeah, very good news for Schulman. It's sort of gone back to their basics, really. I mean, his whole kind of turnaround effort has been, let's focus on our core staple items. We're talking things like their tartan scarves, their trench coats, and those have shown really robust sales. As you mentioned, it's quite promising signs in Greater China. It's sort of a market that's very important for luxury. They're not sort of entirely out of the woods on that front, but it's really important that they're appealing to Gen Z customers and some of those younger customers as well. So it seems that those core products are really luring customers.
It's not just Gen Z. Guy Johnson's been looking at the price tag for some of these scarves.
But back to basics seems to be working, though, because the basics are quite well priced. And as a result of which, yeah, they seem to be doing quite well. Can I just quickly get your take on this Lululemon story? Which I got in the car this morning and was trying to sort of figure out what was going on and trying to kind of look at it as I woke up.
Don't look too hard, is the advice.
And that seemed to be the kind of takeaway.
Yeah.
I just walk me through. Is this something that Lululemon can correct quickly? Basically, some of their leggings are see-through.
Yes, that's kind of the gist. So basically, they have the new Get Low range, is what it's called, and it's been apparently customers can't really get low is the problem.
Right.
Their products are a bit too see-through, but too sheer, and as a result, Lululemon had to withdraw that whole range from their website only 3 days after its debut. So it's not such a good look, and it's actually the third time this has happened for Lulu where customers have complained about the quality of the products.
Yeah.
Hopefully, they can turn it around. The whole brand is under kind of greater scrutiny at the moment.
It's amazing. And this is so Andrea Felser's got this great piece as well, which I was listening to as well, talking about the fact that if you want to get ahead now, you can't be wearing. It's not about leggings anymore. It's about blazers. You've got to smarten up. So if you want to,
if you want your bonus,
if you want your bonus, basically, it's a great story.
But today in the markets, it's either Lululemon sheer joggings, leggings, jeggings, or
any of the above.
You're just making words up now, aren't you?
I think I'm
okay. Let's get on to safer territory, shall we?
Let's move on. And other things you can listen to and watch. Netflix delivering fourth quarter results that largely beat Wall Street's estimates, but the streaming giant is warning of rising content costs and issued a cautious forecast for the months ahead. It's also looking like it's going to pause its buyback. This obviously comes back to the M&A story, which we've been focusing on as well. Manuel Bagori joins us now. Manuel, let's start with kind of the outlook and the pause in the buyback. Is that what the market is responding to? Because the stock got hit pretty hard overnight.
Yeah, absolutely. I mean, there was a bit of a stock reaction negatively, and mostly based on the outlook. They were a little bit more cautious, and they explained that it was due to potential investments. They see opportunities in creating new shows and films this year, so that require a fair amount of fresh investment, and at the same time, they need to devote more time and money to the potential closing of the Warner Bros. Deal that will also require a fair amount of investment, and they will also have to carve out some cash to finance that transaction. It was also interesting just the amended potential agreement as well. But this remains an ongoing saga, so let's see what the next episode will be.
And Manuel, what are the details of that amended takeover offer then for Warner Brothers coming through from Netflix?
Yes, Tom, super interesting, isn't it? Well, they amended, they agreed to an all-cash offer deal to buy the streaming business and studios of Warner Bros. For $27.75 a share. Remember that the previous one was a mix of cash and shares. That is still to be competing with Paramount offer that remains there, and whether or not they come back with another offer remains to be seen. But yeah, I think this shift into an all-cash deal is definitely a bold move. So we'll see how shareholders react to that and what the next steps might be. I think there could potentially be new moves from the different parties involved. So definitely worth watching closely as this transformative deal, progresses.
Thank you very much, Manuel. Bloomberg's Manuel Bagori. Always good to get your perspective on some of these deals that we're following. The European Commission President, Ursula von der Leyen, is speaking in Strasbourg, and one of the lines that stands out to me, she's saying that it is important that Europe fully prepares to act if necessary. And she's been talking about trade, of course, and the potential for responding on the trade front over recent days.
What does acting mean? Does it mean putting troops into Greenland? Does it mean ongoing military exercises? Is it exercising some of the more extreme measures that Europe has at its disposal? The French would certainly like to push us in that direction. How we respond? We're going to respond.
She's giving us a few lines here. She's saying we need a departure from Europe's traditional caution. They agree with the US on the need to secure Arctic security. The US's threat of additional tariffs is simply wrong. Preferring dialogue and solutions with the United States. Europe fully prepared to act, yes, was the line I mentioned earlier.
Is this EU leadership laying the groundwork for using that anti-coercion instrument? We know the trade deal is essentially frozen at this point, the US-EU trade deal.
The criticism of her is that she's been super cautious. The criticism of Ursula von der Leyen is she has not pushed the agenda hard enough in Europe. Maybe we get a tougher line from her going forward from here. But is Europe really willing to go toe-to-toe in the way that the Chinese did with the United States? I don't know, but maybe that is the lesson that needs to be learned for Europe. Anyway, coming up, we're going to head back to Davos. We're going to talk markets, we're going to talk technology, Meta, AI's ambitions, front and centre. Nicola Mendelsohn is going to be joining us. This is Bloomberg.
This is the opening trade. Welcome back. We are 30 minutes into today's session. Is this wait and see ahead of the big presidential Trump visit, of course, and speech in Davos? Is this a market on tenterhooks? There's been a bit of a reprieve over in Japan with some bond buying, so making up for some of the losses yesterday. But really, it is the build up to that speech. And so for the moment, it seems many investors are not taking big bets. Across the European benchmark, you are down just 0.1%. The DAX over in Germany down 55 points. The CAC 40 is supported by the luxury space. Burberry came through with some results suggesting that China is turning around, so you're seeing French names in that sector lifting the broader index over in France just modestly by 3 points. The FTSE 100 here in the UK currently down 0.1%, but the basic resources story is some strength. The mine is doing quite well on the back of higher copper and gold prices. Guy.
Okay, we're basically holding yesterday's position. Big moves yesterday. Today, nothing really to see here. 291 stocks are up in the stock 600, 292 are down. I guess you'd call that a fairly evenly balanced market, obviously not taking into account weightings. Volume is light. We're on a 20-day average, down by around 20%. It's a fairly choppy number, but we are light today. Market's waiting to see what happens next. Tom mentioned the luxury names, LVMH, Burberry, both rising quite nicely. LVMH, obviously, the bigger company, but Burberry responding well to what has been delivered today. Miners are up, as Tom says. We're up by 3.3% on Rio. Let's talk about where we're seeing some downside weakness. You've got it in Danone. I think there's a price cut on that stock this morning. We're down by 6.6%. So ratings, upgrades and downgrades are having an impact. Novo and AstraZeneca are both soft. The pharmaceutical sector continues to be under pressure, Anna.
Let's talk about some of the other stories that we keep on watch today. Japan's longer maturity bonds have rebounded after the finance minister, Satsuki Katayama, called for calm among market participants following a rout that pushed yields to an all-time high. Meanwhile, Japan's second biggest bank said that it plans to aggressively rebuild its local sovereign debt holdings once the surge in yields runs its course. The UK is seeking to advance talks to sell warships to Denmark amid increasing threats posed by Russia in the North Atlantic. This as transatlantic ties are put under strain by Donald Trump's efforts to take control of Greenland. Sources say the UK Defence Secretary and his Danish counterpart are expected to discuss the potential agreement when they meet in Copenhagen later today. Speaking earlier, the US Treasury Secretary Scott Bessent said President Trump will be, quote, about 3 hours late to Davos, where he is due to speak later. President Trump's trip to the World Economic Forum was delayed earlier after his plane had to return to Joint Base Andrews shortly after takeoff due to a mechanical issue. That was said, Tom, to be out of an abundance of caution. He was put on another plane and he is en route now to Davos, expected to arrive late, but not necessarily to speak late.
Yeah, 1:30 p.m. local time is the still expected time for that speech, isn't it? Despite that delay on Air Force One for the US President. The topic of AI, of course, in Davos is high on the agenda as well as what we expect to hear from Trump. And the message from tech executives is that it is a powerful geopolitical force. Let's bring in Bloomberg's Francine Lacroix, who, of course, is on the ground for us in Davos with another guest, Fran.
Tom, thank you so much. I'm delighted to be joined by Nicola Mendelsohn, Head of Global Business Group at Meta. Thank you, Nicola, for joining us. Look,
Great to be here.
There's a lot going on for the tech companies. We'll talk about growth. We'll talk about the use of AI. But there's also more and more countries in Europe trying to think of banning social media for under 16s. What do you say to that?
Look, we've raised concerns about this, and keeping young people safe on our platform is incredibly important to us. It's an absolute priority. And we've been investing in this area for a number of years. It's why we launched Teen Account back in 2024 to keep young people safe, to give parents supervisory controls so that they can also work with their children, their young people, in terms of keeping them safe. So what does that mean? It means restricting the amount of time that they spend on the platform. It means that they can restrict who comes on, and we place them all in that category automatically. So this is very important. But of course, we're going to work with regulators wherever they are.
Do you think the ban will come through?
I'm not going to speculate. I'm not going to speculate with you on that.
What are your primary goals for dealing with Brussels this year? The company was targeted with an abuse of dominance probe last year. Given also the relationship between the EU and the US now, do you expect it to get worse?
So I don't know where, in terms of how we speculate on where it will be. But what's very clear, and talking to European business leaders in particular here, they're very concerned about the rate of innovation and the rate of growth. We're seeing that all of the tech platforms have not been able to launch particularly their AI products at the same rate as they can the rest of the world. And there's increasing frustration with business leaders here, even more so than last year, because they can see that they're not able to take advantage of all the new products. You know, when you look at some of the research out there, take GDP. 20, 30 years ago, GDP of Europe and the US was exactly the same. When you look at the creation of new companies that are reaching over 10 billion in market cap, Europe's had about 20 of those companies. The US has had over 200. So it's very clear that there's a link between complicated regulation and also the ability to allow innovation to flourish and grow.
But is your relationship with Brussels changing? And actually, how do you approach regulators?
So we work very closely with regulators. You know, it's complicated in Europe because there's over 270. So we're always going to err on the side of strong regulation that allows both for people to enjoy the new products that are out there and businesses to be able to use the new products. And a good example of some of those products are we're talking here about growth as well, is our whole AI suite of products. Yeah. So they're called the Advantage products. They reduce the number of steps that advertisers have to take. Mm-hmm. And what we see now from the research is that for every dollar invested in our platforms, we're seeing an average return of $4.52. These are strong numbers. And when businesses turn on these devices, these tools that we have on our platform, accessible for everyone, the biggest kind of businesses in the world, but also, the local bakery in Cloisters, they're seeing on average between 20 and 25% increase in return on ad spend. So these are the things that make me very excited.
So what's the main way, for example, advertisers are even using AI?
Yeah, well, many different ways on our platform. So first off, we use AI when it comes to people on our platform to see more of the things that they want to see. So we have growth across all of our different platforms, which is fantastic to see. Then we have the Advantage Suite, which is very simple. I mean, some of the practices that you used to do took 150 different steps. Now you can do it in one step. We also see more and more the increase in our generative AI tools, how they can use it for text, for translations, for even the creation of for video now. We have over 2 million advertisers doing that. So all these things are combining alongside both Reels as well to really give growth for our advertisers.
Nicola, what do you think is still untapped in your mind?
Oh, so many things. I mean, I've got a whole smorgasbord of things. So definitely messaging. We're seeing a continuous uptake in more personalized communication between businesses and people. There's now over 1 billion messages sent every day between people and businesses. We see 8% of people around the world globally that are speaking with a business every single week. So this is an area both on the marketing side, but increasingly more on the utility and the authentication side. A good example is Air France. So Air France, when they switched this on, within a few days, it became their primary source of communicating with their customers. And they're doing it to deliver boarding passes, tell you about where your baggage is, also remarketing as well. So that's a very good example of some of the changes that we're seeing all over the world.
And where are we on AI-generated ad campaigns? I mean, could you see a future where actually, I also give my credit card to Meta and then you do the rest of what I want to buy or not?
So we're already being able to provide, and especially for our smallest advertisers, that they can go in and they can start a campaign by giving very clear instructions on who they want to target, what sort of growth that they want to see, and how they might want to adapt the different message in different ways. So we're working towards that as well.
Nicola, there have been reports that Manus is being folded into Meta's business unit. Can you talk about Meta's efforts around building a subscription business?
Yeah, okay, so there's a few questions in that. First of all, we're very excited about Manus. That deal was only closed like a week or so ago, and it's very much towards a drive towards Mark's vision of personal superintelligence. We already put Meta AI across all of our platforms, and so that means now that over 1 billion people are using Meta AI on a monthly basis. So that's fantastic that they have access to AI products for free. Within that, then, there's many different areas that we're working towards. And what does superintelligence mean and how we're going to get it? And what's the best form factor that we think that we'll see that in? Well, it's got to be the glasses, the wearables. And that's a big thing that we're demoing here this week. I've got my neural wristband on. I spared you my glasses as well. You've been trying it and you know what it's like. So the fact that the AI, which is delivered through the glasses, really keeps you in the moment, keeps you present. And the AI sees what you see, hears what you hear, and then can act as your own personal agent to help you with whatever a task it is, to maybe send you a birthday card in advance because it knows that matters for me to be able to do that, to many other things as well.
Nicola, thank you so much for joining us today. Nicola Mendelsohn there, Head of Global Business Group at Meta. And I'm going to send it back to you in the studio. We'll have plenty more throughout the day here in Davos.
Francine, thank you very much. Bloomberg's Francine Lacroix. And of course, Tom, we are just beating the drum towards President Trump, aren't we? That's going to be the big geopolitical focus of the day.
The drum roll, you can almost hear it, can't you? Despite the glitches on Air Force One, he will be there for that speech. 1:30 p.m. London time is what we expect. And of course, we will bring that and all the analysis live to you, of course. The big question for us has been what kind of tone the president will strike, particularly on the question of Greenland. The expectation a few days ago was that he'd be talking about affordability. Now, of course, we're waiting for anything he has to say about Europe, about threats of trade tariffs and about Greenland.
Got some great guests coming up as well. Looking forward to hearing what Bill Winters has to say, what the banking sector is looking for in some of these speeches as well. As we say, got some fantastic guests coming up out of Davos. Philip Hildebrand will be with us. Bettina Orlok from Commerzbank. Steve Witkoff a little bit later on as well on Bloomberg Television.
There's a lot of money, of course, in Davos. And talking of money and the wealthy and the elite, coming up, by how much did Ferrari new car registrations here in the UK decline in the third quarter of last year? The answer when we come back. This is Bloomberg. Welcome back. Now, before the break, we asked by how much did Ferrari new car registrations here in the UK decline in the third quarter of 2025 from a year earlier? The number and the answer is 44%. Auto market research firm Jato Dynamics says Ferrari's UK third quarter 2025 new car sales totaled just 116 vehicles, marking the luxury car maker's weakest quarter in this country this decade. Speaking to the Financial Times in October, the Ferrari CEO previously attributed a reduction in the number of cars the company sells here in the UK to people leaving the country for tax reasons. Anna Edwards has yet to convert the Fiat Punto to the Ferrari. Anna.
I've also yet to leave the UK for tax reasons. I thought that's what you were going to say, Tom. But no. Right, let us return to Davos as investors and businesses grapple with a rapidly changing world order being reshaped by the US President Donald Trump. The focus is firmly on his upcoming speech at the World Economic Forum. There will be a lot for global finance to think about. With that in mind, let's get back to Francine Lacroix in Davos.
Much, Anna. Look, there's a lot going on today. We know that the president, of course, is going to be delayed by a couple of hours, but we're still expecting him to speak around 2:30. And I also expect the queue to get into the Congress Center, it's open to everyone, will be quite long. Now, to talk about geopolitical risk, I'm joined by Standard Chartered Chief Executive Bill Winters. Bill, thank you so much for joining us. As always, there's a lot going on. There's a lot of risks. There's a lot of geopolitical concerns, geoeconomics. What do you worry about the most?
I worry about the complete breakdown of dialogue. So what we found over the past many years, actually, this has been going on for quite a while, of geopolitical tension, is that things get very hot, and then people talk about how there is some common ground, and we get back to something. Things change, of course. Things have changed a lot, but get back to something that's manageable. So for us at Standard Chartered, our job is to connect. We connect markets to markets, people to people, east and west. And as long as people are talking, those connections work really well. So my fear is that the dialogue breaks down.
Why? Why are people not talking? Because they're too far apart?
I think people are talking, and I think it's fantastic that we've got 6 of the 7 G7 heads of state sitting here in Davos. They didn't come here because they enjoy the cold weather. They came here because they want to talk and share some views. So I'm hopeful that we can work through this.
But what do you worry if there is a further breakdown in communications? Is it trade and tariffs that's top of mind? Is it potential wars?
We've obviously been through a big period of volatility in tariffs. I think we've gotten to a place where we're definitely operating in a different world with much higher barriers to trade in some key corridors, most obviously with the U.S. But the global economy is continuing to perk along just fine. China, which was the most affected by tariffs, printed a 5% GDP number last year. Of course they've got problems. Of course there are challenges. This enormous trade surplus is one of the imbalances, together with the fiscal deficit in most of the world. These are real imbalances that are structural. So I worry about these, but these seem to be a little bit more medium, long-term things than tomorrow.
Yeah, but Bill, so what do you worry about tomorrow? And again, China was the only country last year that actually retaliated. What happens if more countries retaliate this year if things get a little bit crazier?
Well, I don't know about when we get into the tit for tat. It's always hard to know which came first. But at the end of the day, when people have stood up to each other and said, "This is what's important to me," they've tended to find an accommodation that makes sense. Yeah. I hope we can find the same accommodation on the issues of the day. But yeah, I mean, another ratchet up in tariffs would certainly rattle markets as they did a year ago. I think there would still be a hope that the dialogue could unravel that. I think the security issues around the world are not. The market seems to be a bit immune to what happens on the security front in any of the theaters of conflict, but only to a point. And if it feels like it's changing the world in a structural way, or inviting aggression, for example, in any of the different spheres of conflict, I think that could be rattling for the markets.
Are clients asking you to move away from U.S. assets?
No, but we're a U.S. dollar denominated bank. Our main businesses are moving goods and money between markets. We're not a big asset accumulator. So no, we're not, and certainly nobody is saying you should be underweight the U.S.
But do you see a move away longer term from U.S. assets?
I think there's been a diversification of asset portfolios for some time. So. The euro was created in part to have an alternative to the U.S. dollar as a reserve currency. But the euro's had its own problems, as we know. But the percentage of reserves held in U.S. dollars has been going down. U.S. dollar still dominates. The proportion of trade that's denominated in U.S. dollars is going down significantly. China has an interest in having payment flows happening in currencies other than the U.S. dollar for the obvious reason of the weaponization of the dollar. So that diversification and that it's not even diversification. Diversification sounds like you're making a risk-based decision to spread things around.
Right.
Actually, it's just there are convenient and efficient channels that aren't just the U.S. dollar channels, and those will continue to develop.
But how much volatility are you expecting in markets? And actually, it could be a good kind of volatility, or it could be the bad kind, which could come from like an AI bubble or a systemic worry.
Well, when we think more broadly, I think there's been a structural shift of capital from the banking system into non-banks globally. And that's following on the capital rules following the great financial crisis, which leave the cost of capital for banks relatively high for some assets, not all assets. And that migration is happening. So the good news is, and these private credit buyers, whether they're mutual funds or big asset managers or dedicated private credit funds, they're not very leveraged, much less leveraged than banks. So if we do have this appearance of credit losses, if the credit cycle manifests itself, which it will. Right?
This year?
No, I don't know. I wish I do. It doesn't feel like it at the moment, I can say. But the credit cycle is not dead, so of course it's going to come back. And credit cycles are fine. They get ugly when that translates into a property bubble, right, as has happened in China, happened in the U.S. That doesn't feel like it's going to happen outside of China, who's cleaning their problem up. And it's really bad. They get really bad when they infect the financial system. When the financial system has to delever quickly, great financial crisis being the big example, then the credit cycle becomes amplified by hundreds of times in terms of GDP impact and prosperity. It doesn't feel like we're there because the system is just much, much safer and sounder than it has been. The debt, as we know, has gone into sovereigns. If a sovereign were to get into trouble, no indication of that, that would be a different story. But that's not going to happen.
Could we see a downgrade of the U.S. economy? Could we? I mean, is there any? I don't know if there's a flash. Is there a flashpoint that you worry about away from credit?
The U.S. economy is doing quite well. The economic growth is strong. Inflation is not as low as the Fed and others would like, but it's not out of control. And trade flows are good. Investment flows are good. So a downgrade of the economy, I don't know. A downgrade of the credit, possibly. I mean, they've got big budget deficits. No, so I think right now the world feels pretty good. I think we'd have to do something pretty overt in terms of letting one of these conflicts blow up to disrupt what is otherwise a good business environment.
Bill, your bank is probably a little bit more advanced when it comes to crypto and digital assets than others. Like, what's next?
I think we're just in the very earliest stages of things like stablecoins that have been a bedrock of the crypto community, that self-contained crypto community, moving into what has been traditional banking and the use of fiat currency. So we're just beginning to use these stablecoins or tokenized bank deposits or other types of digital money as a medium of exchange for trade and for payments. I think as that happens, we're going to see a complete rewiring of the banking system and, in fact, the financial system. We've been sort of on this case for about 8 years now. We've got lots of seeds that are planted. They're sprouting, but they're really quite early green shoots. But it's going to happen. It's going to happen.
Bill, I think less than 2 years ago, you called your share price a word that I cannot say because we're Ofcom regulated, but it wasn't a good word. It wasn't a good word. It wasn't that bad. But now you're all at record highs. Are we going to see M&A from you guys?
Well, we've had a good run up in our share price. I think we are. I'll say we're still cheap. I wouldn't go as far as to say we're some expletive, but there are a few areas that are critically important to us. We're a cross-border bank, which means that we're serving our clients who have cross-border needs with their risk management, with their payments, with their funding flows, with their investments, et cetera. Associated financing. We don't need to do any M&A for that, and nobody needs to do M&A with us. The second key area of focus for us is our affluent client franchise, so wealth management products. Super fast growth. We're the fastest growing wealth manager in Asia, Middle East, and Africa, third largest overall. Very attractive business, and we would love to build out that portfolio. So if there's something that we could buy or partner with, one way or the other, we'd love to do that.
Okay, Bill, thank you so much for joining us. Standard Chartered Chief Executive Bill Winters. Tom, I'm going to send it back to you in London, and of course we'll be here with nice weather, a little bit cold throughout the day, waiting for the President of the United States to land in Davos.
Fran, great stuff. Thank you. Of course, on the slopes for us at Davos, Francine Lacroix, with the CEO of Standard Chartered, Bill Winters. And if President Trump's speech at Davos wasn't enough for you, here's what else to be thinking about today. 9 a.m. UK time. We're counting down to this. Then the IEA oil market report on a day when we're seeing some pressure coming through for oil prices. US earnings, Johnson and Johnson on the docket, Halliburton and Charles Schwab. And Warner Brothers, the shareholder deadline is coming up. Netflix changing its deal to all cash. And later, it is the Supreme Court hearing that case in terms of the Trump administration versus Lisa Cook. That could be consequential.
OK, but we're waiting for Trump. The Lisa Cook thing, I think, is really interesting, but we'll come back to that in just a moment. We're waiting for Trump. What is he going to say? What does he do? Is he going to de-escalate? Is he going to escalate geopolitics front and centre this morning? How does that translate into the market? Let's find out. Scarlett Montgomery-Koenig joining us around the table from our M Live team. Is that what we're waiting for?
Yeah, I mean, absolutely.
It's the only thing, isn't it?
I think what's been interesting in the last couple of days is typically markets move on from geopolitical risk quite quickly.
Yep.
So I think that would be your baseline assumption now as well, especially because we've had more kind of bond market calm. The kind of soundings overnight was that Trump is still open to a deal. And so it's unlikely that we get a material sell-off before we get to that announcement.
Yep.
Now, it very much depends on what that announcement or what that speech is, the feed through after. And what makes me a little bit more worried, although I think the base case should always be you move on from geopolitical shocks like this quite quickly, is positioning heading into this week. So if you look at something like AAII surveys, it was the most bullish heading into this week that it's been for a year. So there is potentially more room for people to draw down or take profits.
Yeah. So this was a geopolitical event, but it had an economic expression with the tariff threat from President Trump, didn't it? Let's talk about Japan. Have we moved on from that, do you think? I mean, it seems to have been parked for now, but still on a 2-day, of course, yields are higher at the long end in Japan.
Yeah, I mean, I think on the long term, we've certainly not moved away from the discussion of higher term premia, whether that relates to Japan or the U.S. The context is we're coming from the 2010s where you had QE, you had very low policy rates, very predictable monetary policy, And so that means you have this unusual level that was very low in term premia and in yield. So as we shift to an environment that's more uncertain from an economic perspective, as you have a flipping bond equity correlation, all of these factors means that you should really have a higher term premia, and it means that when you have greater supply, greater fiscal, that you're thinking about it. And, we're only like 2 weeks away now, or just over from the actual election. So we're certainly watching that for what the announcements are and whether you get a stronger mandate there. And that could certainly be a trigger again.
Of course, the Japan story can't be done. We still have the election to go.
Countdown to February the 8th. And, of course, we're seeing that bid for Japanese bonds in the session today. But we'll see how long that lasts, of course, and whether or not there is significant repatriation of those assets into the Japanese market. Skylar, thank you very much indeed. Skylar Mongori-Koning from our MLive team. It is the countdown, of course, to the President's speech at Davos. We're also going to be hearing, by the way, from the World Economic Forum, from BlackRock's Vice Chairman, Philip Hildebrand, and at 9:15 UK time, the Commonwealth Bank CEO, Bettina Orlop. And at 10:30, we will hear from the US Special Envoy, Steve Witkoff, who, of course, has involved himself in a number of those geopolitical tension points and flare points. That's it for the opening trade. Up next, we are back to Davos, of course, for the Pulse with Francine Lacroix. This is Bloomberg.